Today, the stock market was closed. However, for us future traders, the futures markets did trade today. Look at the S&P 500, 4-minute inside day. And do we have a pattern that's about to set up? Now, before we jump over and look at the charts, I want to remind you guys, if we look at the fear and greed index, right now we're sitting at 64. We are almost dead smack in the middle of greed. And before we go ahead and take a look at any of the chart patterns out there, I also want to remind you guys right now, September is historically the worst month of the year for stocks. Why this time could potentially be different. Now, also with the beginning of the month, we're also going to have new 401k money entering the market. And if we scroll down here real quick and just take a look at this graph, look at the different months and how they have performed going all the way back to 1928. The NASDAQ in this chart will be 1971. The Russell 2000 will be 1987 to the current time. But if we look at the worst months out here, we can say historically, September is the worst month for the Dow, being down 1.1%. We look at it for the S&P 500, also being down 1.1% on average. The NASDAQ down 0.9 and the Russell 2000 up 0.6. The second worst month for the S&P 500 appears to be February. Now, even if we go ahead and we look ahead a little bit, we go ahead and look past the bad month out here. Even October is not the most bullish months out there. Historically, the S&P 500 will be up roughly 0.5%. And that brings us to this article right here. This twice in a lifetime opportunity means the S&P 500 can hit 7750 by the end of next year. Let me know if you guys agree with this in the comment section down below. But basically what it goes on to say is throughout this article, it talks about it's a structural tech-driven bull market that has been interrupted by a non-recession bear market. And one of the things they go on to talk about throughout this article is they say right here, AI is bigger than the internet in just 3 years. Now, if we go back in memory lane, let's look at what happened in the dot-com era. And this was all about the internet hype. Remember, the NASDAQ went ahead and dropped from the peak all the way down to the trough, roughly 83.86%. So you do want to be mindful of that. Now, if we come over real quick, and as we start looking at some of these charts, we'll start off looking at the NASDAQ on the 30-minute chart. We drew this out today on the live stream. Now, if you don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. But we have this leg right here, the A to B leg. Then we have the corrective leg, which is the B to C leg. And we project up here for the D completion. That pattern will complete at 23,574 and a quarter. And notice we were able to just barely get above the B point. So right now that pattern has been validated. Now today on the live stream, we kept looking at some critical levels. We knew we had resting liquidity from 505, 510, and then at one point all the way up here at 520. Notice right here is where the big sellers were lurking. As the market pushed up towards it, they pulled that order and they quickly put it right up towards that level. Now, unfortunately for me, I kept trying to swing for that level. I want to see, could the market make it all the way up here to 505 or even 510 price point? And the funny part about it is I end the stream around 11 o'clock and then look what happens. The market starts running up. But notice those potential sellers that we saw resting up there, look what they did. They went ahead and pulled their orders. And let me show you guys real quick. If you look right over here, at the 505, we had 309 contracts. Then at 510, we had 601 contracts that were resting there. And as they see this pattern starting to develop and the NASDAQ going up, go ahead and validate in that ABC pattern, they yank those orders. So now will it be clear blue skies all the way up? Go ahead and taking out that price target. If you notice, we just closed just below value area high. And the question is tonight, do we break above it? If so, then I want to look right over here. This little high volume node on the profile, somewhere around 23,533. That would be my first target. The second target I would want to focus on would be the ABC pattern completion. Then as we start looking right here, we had that structure breakdown point. We talked about this in Sunday's video, anywhere from 23,613 up here to about 23,032. Will we be able to make it all the way up towards those price points? Now, I do want to let you guys know right now, Take Profit Trader, 40% off all their evaluation accounts, 0 activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code epitome at checkout. Now, if we come over and look at the dollar index was a little bit weak today, but we come over and look at the precious metal gold. Gold on the move up once again. We had over 100% retracement level. Now the question is, are we about to make another new all-time high? Also, those of you that like to trade silver on the move up. And again, this is also a play on letting us know there is a lot of uncertainty out there in the stock market. Keep in mind, only 15 days away until the next FOMC meeting. And as we look at this chart, there's an 89.6% chance that the Fed will be cutting rates at the next meeting. So now if we come over and look at the S&P 500, you can see basically last night we had chop, 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 chop. And now the question is, are we about to break up and out of this area? We can see that from last week's value area low, last night we were able to spike below it. Then we came back up. Target 1 would have been the point of control. Target number 2 is going to be up here towards value area high, which is going to be about 6497.75. Then as we come over and start looking at the daily charts, notice we have a very similar pattern to what we just talked about with the NASDAQ. If you notice, we'll draw this out real quick. Grab your Fibonacci extension tool, measure from the swing low right up here to the swing high, and then we go ahead and pull it right down here to the swing low. That will give us a price completion up here at about 6493.21. Now, last night, I felt very confident about taking a play right towards this area, right around 6490. And we talked about this not only on the live stream on Friday, but also in Sunday's video. We have a structure breakdown point, and we mapped this out from basically candle body right up here to the candle wick. Now, you could have made the upper part of that level a little bit lower. Maybe you went to that candle body right there, but nonetheless within that zone. Now, what's kind of funny about this is the top of that area also correlates with the potential A to B equals CDD pattern. And the reason why I say potential, keep in mind, the pattern is not truly validated until we break above the swing high of 64.85. Once we break above that, then the pattern will truly be validated, and we'll see if we can run and hit the price target up above us. Now, keep in mind, if we do start to fail right around this area, and we start looking over here back at the 4-hour chart, notice this could actually be part of a bear flag pattern. We see this would be kind of the flag, and right here would be the flag pull. That would suggest that we are going to go substantially lower. Now, if that pattern were to play out, that would give us a price target down here, somewhere in the ballpark of 6422.57. However, I'm not really in that camp just yet. I do think we're going to go lower this month. But if we look at what is it going to be in store for tonight, we clear off the charts where it's going to be very simple. One, can we get above value area high? If the answer is yes, I want to target this high volume node on the profile somewhere around here, about 64.87.5. If we can clear through that, I then want to go ahead and focus on this structure breakdown point. And for this example, I'm actually going to bring it up just a little bit higher, anywhere from 64.89 all the way up here to 64.94. I also want to grab the Fibonacci retracement tool, measure swing high all the way down here to the swing low, and notice that 50% level comes in right at the bottom of the zone. 61.8 is a little bit higher. Now, in the event that we're able to break above the 61.8 Fibonacci level, I then want to turn my attentions towards this minus development area above us, anywhere from 65.04 right up here to about 65.09. And if we start really breaking above that 786, you guys know the routine. We're going to see the S&P make another new all-time high. Now, if you guys like to see how this trade copy could have stopped me from blowing up my Apex accounts, make sure to watch this next video right here.